Hey everybody, how you doing? On this interview chat with Chatto, we're going to have a quick chat with Belinda Prattis. Belinda, how are you?
I'm well. Thank you so much. How are you doing today?
Awesome. I appreciate your getting on here because this is a subject that I personally don't know too much about. Because I've been dealing with small single family houses and just something I never got into. And a
Hmm.
friend referred me and said, "Hey, this is something that's really interesting and potentially a way to save a lot of money in taxes, right?"
Yeah, it's
Absolutely.
true.
So cool. So yeah, that being said, like we're gonna jump right into it, and I'm
Okay.
gonna, kind of ask you the first question here is really in English, like to break it on down and make it simple. What is a segregation study? It sounds like a big fancy word. What is a cost segregation study? And as a small landlord, like why do I even need to worry about that?
That's a really good question. From what I understand, you're in Pennsylvania, right? And the very
Yes.
first client that I ever helped with cost seg is also in Pennsylvania. And she had a very small rental out in the Poconos, actually.
Okay.
And if we meaning myself and the company CSSI, if we can't save somebody at least five figures, we'll be very straight up and say, this might not be worth the money that you're spending, right? She came in at just above five figures, right? And the reason it made sense for her, to answer your question, is that her spouse um, left the W-2 that year and became a full-time real estate professional. She herself got a raise at her job, so she was now in a higher tax bracket. They just had a
Okay.
baby, right? And they were like, listen, if I can reduce my tax bill, I'm doing it, right? It didn't cost her a whole lot. Her ROI wasn't as big as some of the other commercial building owners that we work with, but it made
Hmm.
sense for her because of her situation. So I'll tell you that she saved about $12,000 on her tax bill. Her tax bill is not $12,000 a year, right? She's like, it's about half that, but I don't want to pay $6,000 this year in taxes. So she will be able to use that $12,000 until she uses it up.
Gotcha. So, so what exactly is that cost segregation study? So what is it that you're doing?
Sure. So, want the long answer or the short one?
Middle. Keep it in the middle.
All
Best
right.
you
So,
can.
cost seg started about 25 years ago or so, right?
Okay.
Hospitals got together and said, listen, we can take this depreciation one line every year for 39 years. That's great. However, we have stuff in our buildings that depreciate faster than other things. For example, hospitals have antibacterial paint on their walls and they have to change that every 3 years,
Oh,
right? So they said, why are we paying full taxes for 39 years on an asset that depreciates so much faster than that? So they took that all the way to the Supreme Court. They fought the IRS and they won.
wow.
Right. So the Supreme Court said whether you are a hospital or a person with a 3-2 in the Poconos, that you purchased for 165,000, none of you should be paying super high taxes on the parts of your buildings that depreciate faster,
Okay. Gotcha.
right? So the concept is a cost seg study is where engineers come out, not CPAs, because CPAs are not engineers, they don't understand buildings, right?
Okay.
Engineers we'll get a site visit, we'll take pictures and video of your property. You let us know if there's anything different about your property. Like I did an estimate for a gentleman who has a property in Tennessee on 6 acres. Two things about that property is that he's got a metal fence going around the whole thing. That's a 15-year depreciable asset. Not every six
Oh,
acre
okay.
property has that. So that's something that will allow him bigger depreciation. So they will reverse engineer your building and your grounds, right? And say, here's the four buckets: 5 year depreciation, 7 year, 15 year, and then 39 years if you're a commercial building, 27 and a half if you are a residential commercial building, meaning like you're a landlord, right?
Yep.
If we'll talk about the 27 and a half and 39 years later, but what part of your building falls into these buckets? It's usually
Okay.
somewhere between, I want to say 20 to 35%, right? Will fall into those
Okay.
buckets. So 25 to 35% of the building is depreciable up front, which equals a pretty large tax savings.
Gotcha. Okay, cool.
Mhm.
So on a, so I know one of the things you mentioned, um, was this person had her husband had become a full-time investor or something like that. So
Real
how,
estate
how does
professional.
how does that play in? Like as a landlord, like what's the first thing I need to look at to see if this type of thing is going to help me?
So whether you are working a W-2 or you're a full-time real estate professional, it will help you. It will just determine your status will determine is it going to help your active income or your passive income, right?
Okay, gotcha.
So in her case, there was one real estate professional and one not. So it
Okay.
helps the active income for both.
Oh, okay,
Does that
gotcha.
make sense?
Because they're married.
Right? Yes, exactly. If they're married filing jointly, it will help the active income for both. It'll reduce your tax liability for both.
Gotcha. So for a single person, if they have a
hmm
full-time W-2 job, it's
hmm
probably going to be it's only going to come against their passive income.
Unless you can verifiably prove that you're putting in at least 17 hours a week and you don't have a property management company, like you are active in your real estate business. So I'll give you an
Gotcha.
example. You can even cost seg your own house if you house hack. If you live in one room and you rent out all the other four, obviously you are the one managing that property, even with a
Okay.
W-2, right? Or
Gotcha.
if you've got, I don't know, a mobile home in your backyard and you're renting that out, even
Uh-huh.
with a W-2, you can pretty much prove that you're the only one managing that property.
Okay, cool. And obviously that's like a deeper, I'm just trying to get like an overview of
Sure.
everything, right? So,
hmm
um, so, and again, I think you said that you want to see somebody saving at least five figures in tax
Correct.
savings.
Yes, and your eyes kind of went big when I said
And
that.
that's kind of over, and that's over how much time? Like, is that because you said the lady had like 12,000 in savings, but like she was getting six
hmm
and saving some. Can you explain that a little bit?
Yeah, so I'll give you a better example. I was helping a gentleman in Iowa. He has a small motel, it's 30 rooms. He was
Okay.
able to accelerate about 900,000 in depreciation, which for him in his tax bracket equaled 249,000 in tax savings.
Wow.
His tax bill comes to roughly 17,000 annually. If you divide 17 into 249, how long is it going to take for him to use all 249 of that?
Yeah, a long time.
So, right, so that means for years he doesn't have a tax bill if he chooses to apply his cost seg benefits to that year.
Gotcha. Okay, so I guess like if I called you up and like gave you my situation and we did an initial thing, and you said, "What this might work." Like, what does it
hmm
look like in order to like on my side? You said like an engineer has to come out. Like, what's that process look like, and how long does it take?
Sure. So there's a few ways to do it. Like people who, have done this before, they can just go to my website, put in their information, it comes to me, I can submit the information. But most people, right, they want to talk first, like, hey, here's my building, here's a few things about my building that are different, right? And I'll ask a few questions. When did you purchase it? What's the address? How much did you purchase it for? What's approximately the land value? If you don't know, our engineering team will automatically take out about 20%. And then, of course, your CPA can be the one to determine whether that's correct, right? Because we work in conjunction with CPAs. CPAs, a lot of
Okay,
CPAs don't do this. The big four firms, sure, they've got their own cost seg teams. But because of the engineering component, the IRS says we'd really prefer a specialized company do this because this is all they do, right?
gotcha. So you're actually talking to my CPA. Like you
A lot of
actually.
the times I'm not actually.
Oh,
I
okay.
will talk with them sometimes after the fact. Sometimes, believe it or not, I've found that many CPAs don't know what this is, and that's shocking to me. So those are the CPAs I do speak with beforehand, and they're like, "Well, wait a second, or explain this
Yeah.
to me more in depth." But afterwards, they do have to take that and prepare your taxes, right? So that's
Okay.
usually the time when they'll get on the phone and be like, "Hey, let's go over these numbers, how did we get here, et cetera, et cetera." But usually I'm talking directly with the building owner, so I'd be talking with you. So purchase price, address, obviously, land value if you know it. Have you done any renovations or repairs to it? And that's a really exciting topic that we'll get to right after this. And Did you buy it with a 1031 exchange? And when did you start using it? When did it go in service? Right? Did you start using it
Gotcha.
right away? Did you have tenants in it, or was it serviceable? Like even if you didn't have a tenant, could you have had a tenant, right?
Okay.
Without making any repairs? Was it listed and you just couldn't find a tenant? That's considered in service also,
Gotcha.
right?
So once
So I'd
it's
take that information and I'd give it to our analyst team and they'd come up with just an estimate. And that estimate is free, right? Doesn't mean
okay.
that you have to move forward. It's just so you can see this is about how much we think you'll save. This is what it will cost you.
And does that, how much you think it will save, go into play with how much money that that person's making and what tax bracket they're in? Or is that,
The tax bracket, definitely the tax bracket. So we always show the estimate at the highest tax bracket. Obviously, if you're at a lower tax bracket, that number would come down according to your tax bracket, right? But
gotcha.
it's almost always starting at five figures.
Gotcha. Okay, cool.
Hmm.
Um, so does so like we're depreciating a bunch of this stuff quicker,
Yes.
right? So am I like stealing from future appreciate depreciation? Like is it like a trade-off?
That's a good question. So all of the depreciation, you are entitled to it once every 39 years, one amount for 39 years. You're front loading most of it or a lot
Okay.
of it, right? Which means after after that hotel guy uses his 250,000, he'll go back to straight line depreciation. So
Okay.
if he was eligible for, let's say, 36,000 every year, now front loading 30% of it, he might be eligible for 17,000 a year for the rest of the years that he owns the building,
Gotcha.
right?
Okay.
So it's the same amount of depreciation. It's just when do you take it? And I don't know about you, but I feel like in 10 years, we don't know how much the dollar's going to be worth. The value of that dollar today, I'd rather have it now.
Yeah, that's an interesting conversation, but we won't go down that rabbit hole. But I'm just kind of like thinking about it, right? Like if I'm a, professional, right, and I'm making a good income and I'm able to, my spouse or whatever, prove I'm working 17 hours a week, I would
Hmm.
think if every time I bought a property, I did this, right? Like even if that first one kind of got depreciated out, the second one
Hmm.
now, and like I can constantly keep that tax savings as high as possible. Am
Absolutely.
I
That
thinking
is
about
very
that
true.
correctly?
Yes, you are thinking about that correctly. And so the second part of the answer to your last question about am I borrowing from, am I stealing from future benefits? People always say, oh, well, what about recapture? You have to pay recapture whether you accelerate your depreciation or not, right? So
Hmm.
the IRS says, yes, we'll allow you to depreciate, but you're going to have to pay us back when you sell. Two ways around that. One, keep it. Keep the asset until the service life is over, right? Two, there's a few ways around it, but I'm only going to go over two. If you do sell it, I would say don't do a cost seg if you're going to sell that property within the next 3 to 4 years. It wouldn't make
Okay.
sense, right? Because you wouldn't be able to get your return on investment fast enough, right? So, um, or rather, it just wouldn't make sense with the recapture. Okay,
Gotcha.
it would mess up your ROI totally. So if you're going to do that, buy your next property with a 1031 exchange.
Okay.
Sell that property, use that money in a 1031 exchange and buy your next property. Zero recapture. Zero.
Gotcha. And just real quick, some people may not know what a 1031 exchange is. Just boil that down real quick.
Basically, the IRS says if you have an income generating property and you sell it, right? And then
Hmm.
you go into invest that into another income generating property, things like capital gains and recapture, we will hold on to it because you're going from one investment to the next. You're not just taking that money and, I don't know, going to Switzerland for vacation with it.
Gotcha. Okay, cool. And that's got to go through, like you said, an intermediary.
Yes. Hmm.
So what's some mistakes you see that investors make when it comes to depreciation and cost segregation, like that they're not
Sure. Good
handling?
question. So the first one I see is that people aren't doing it and they're not even asking about it because in their brain, there's a few things happening. Oh, I'm a small landlord. This doesn't count. That's only for super rich people in the 1%, or it probably costs a whole lot, or they just don't know about it. Right? So those four fall into the category of mistake number one, not doing it at all. Mistake number
Gotcha.
two, and I say this not because I'm biased, but because it's true. They pay maybe $500 for a DIY AI version of a cost seg. That is a great way to get audited. A great
Ah,
way to get audited,
yeah, that was
right?
actually a question I had about auditing. So I don't want to
Hmm.
forget that. You finish your
Yes.
answer.
So yeah, you might pay $500 now, right? But if
Hmm.
the IRS comes back and says, how did you get these numbers? Or even if you get audited for another reason, they're going to look at that cost seg because that essentially wipes out your tax bill, right? Anytime you're not paying the IRS, they're going to pay a little bit more attention to that, right? So
Yeah.
you don't have a way of defending how you got these numbers because AI did it, because nobody
Mm.
came out and actually saw the property. There are 13 criteria that we follow that the IRS says this is a good cost seg study. Site visit, in person. Somebody
Okay.
needs eyes on the property, right? Engineering based study, methodology to be able to prove your numbers, right?
Okay.
These are some of the things. CSSI has been doing this for 23 years. They've done just under 60,000 studies, and never have they triggered an audit with their cost segregation studies.
Really? Wow.
Really,
So
exactly.
just the fact that I am using a cost segregation study isn't going to trigger an audit.
Yeah, I mean, there are many other factors. Like with CSSI, when you pay our fee, if you get audited for any reason, we're going to send our tax counsel out at your audit trial and defend our numbers
Oh,
and say,
wow.
maybe you got audited for this, but not for this. You can't take this away. This is defensible,
Gotcha. Oh,
right?
so
If you
you
pay
so that comes
$500
with
and
it.
do it DIY, you're on your own.
Gotcha. So that comes with it is the fact that you're going to
Yes,
come and defend it in front of the IRS if anything comes of it. That's how much you stand behind
absolutely.
what it is you're up to.
Yeah.
Ah,
And
okay,
that's the
cool.
benefit of having a company that is US based. You know, they were born out of the South. They got that Southern hospitality and Southern charm,
Yep.
so
Cool, cool, cool. So yeah, we talked about the I think that wow, I've learned a lot actually. It's an
can
interesting
I
thing.
share one
Like,
more thing that I'm
oh,
super excited
absolutely.
about?
Yeah.
So there's something called PAD, which is partial asset disposition, right? So you take part of an asset and you dispose of it, right?
Okay.
That is double dipping, and I'll tell you how. So we always ask, did you do a 1031 exchange? Did you do any major renovations or repairs? And the reason we ask that is if you've done renovations or repairs that are usually about 70,000 or so, and you've replaced like a major asset like maybe the roof or the foundation or the HVAC system, which does not accelerate in depreciation. Those are always 39 or 27 and a half year, right? So you
Okay.
can't accelerate those. If you change those things out, even if you put a roof on top of a new roof, right? A new roof on top of an old roof without getting rid of the old roof, that's still considered a replacement. The
Okay.
IRS says you can take off the rest of the depreciation life of that asset in the year that you replace it, and only in the year that you replace it, right?
Okay.
So let's say you buy a house today and 10 years from now, you replace the roof, and you're supposed to have 17 and a half more years of depreciation that you can take straight line.
Yep.
That is the time that, in addition to cost segregation, the IRS says, take the other 17 and a half years now.
Okay.
How cool is that?
Gotcha. So it's like
Right?
accelerated depreciation.
It is accelerating, but it's on assets that don't normally accelerate,
Gotcha.
right? So you could
Okay.
cost seg the rest of the house and maybe get, I don't know, let's make up a number, 30,000, but then you do the roof and then you tack on like another 5 to 10, right? But only in the year that you get rid of it, right? Because the IRS says, we don't want you taking depreciation on two assets at the same time. You've only got one roof,
Oh, I gotcha. That makes sense.
right? So you're
So you
double
can't.
dipping. So you can cost seg and take the partial asset disposition in the same year.
Gotcha. Okay, cool. That's
Yeah,
interesting. So there's a lot around it. And I'm sure like,
there is.
everybody's situation is going to be different. Everybody's going to be a little different as far
Definitely.
as where they are in the property and where they are in a tax liability standpoint and all that. So like somebody's like, wow, this is interesting. I've never heard of this. Like, how do they find you if they want to kind of run some numbers and figure out if they should be doing a cost
Right,
segregation study?
right here.
There we go.
So that's my Instagram. And from there, they can go to my website, which is simple, costseglady.com. We see a theme here. And they can put in their information, the same questions that I would ask them in a phone call. They can put that in. It'll come to me. And then that triggers me to call them. I will submit that for the free estimate. It'll take 2, maybe 3 days, and I'll get it back to them. And then we can go over the numbers together. And they can decide from there if they want to do it or not. And if they do,
Awesome.
they pay half up front. They pay the other half when the study is finished.
Gotcha. Okay, cool. That's awesome. I really appreciate it. I learned a lot today, and I appreciate you taking
Good.
some time out of your day to chat with Chatto. And hopefully, hopefully, people are going to learn something from this. Like, it
I
really is
hope so.
something I think that is like, I'm not going to do that. Like, it's just like one of those things to
Yes.
do that's probably not urgent in any way, but it's important.
Hmm.
And those are the
Yes, it is.
places where we get our traction. So thanks again. I
Exactly.
appreciate it, and talk to you soon. Bye bye.
All right. Thank you, Steve.